Welcome, everybody. It's a great pleasure to be together. It would have been much nicer to be together in person, but we have a chance to spend some time together and discuss a topic that is favorite to us. I will go ahead and share a screen because I realize we have a limited amount of time. I want to cover some material with you and then, of course, leave some time and space for questions. So, what I want to talk about today is how we can use knowledge from behavioral sciences about human behavior and psychology to accelerate the development of the innovative solutions that we envision to work on together and support a much bigger need, and that's climate adaptation and resilience. So I have divided the content that I'll share with you today in 3 sections. I will start with a little bit of introduction on what is behavior smart thinking. I'll touch on the origins of behavioral economics, which power behavior smart thinking, and then explain what is the difference that it has brought to the table in terms of understanding different socioeconomic contexts. I do know that some of you have some background in the area and are more familiar than others, but just for the sake of setting an even foundation, we will start there. Then we will look in more details at how behavior smart really works in reality. We will look at specifically the applications to the context of sustainability, climate change, and risk. I will give you some examples on how behavior smart thinking has been used in other contexts and how it has powered solutions that have worked. And then in the final third, we will talk about the relevance of the topic to the context that is relevant to our project. And then what is the additional power or benefit that comes from using a behavior smart layer in managing risk and supporting climate adaptation. So we're starting with a little bit of background on what is behavior smart thinking and what has powered it so far. So just a word at the beginning that behavioral sciences have been used in contexts outside of science itself for a few decades now. However, the uses and the scale and scope of how these uses have been employed has changed drastically. So initially, knowledge about human psychology was effectively employed in the advertising and marketing industry. Over time, especially in the private sector, many industries realized that understanding how people make decisions, how they respond to information, what are the different triggers and motivations that make them choose one product over another, are extremely powerful, and they actually need to be at the core of business strategy. So we passed through an era when knowledge about human psychology informed the strategies of entire organizations and businesses. Today, we are at the stage of use of behavioral knowledge that goes much beyond individual organizations and even industry ecosystems and is employed at societal level. Today, insights from behavioral economics are effectively employed in policy and even diplomacy. They're used in the context of healthcare, healthy living, improving societies and physical space, and even peacekeeping, a topic or an area which all of us are acutely aware is extremely relevant today. So with the increase of the relevance of behavioral economics, we really find ourselves in an era of behavior smart thinking. What does behavior smart thinking really mean? In essence, what it means is being realistic and taking into account the realistic way, the actual way in which people think, decide, and act in the context of specific issues and contexts. And the sole reason of incorporating this human realism as a layer in the decision making and the planning and the strategizing is really to come up with solutions that work better and cost less. And the reason that they work better and cost less is that by being realistic about human behavior, we really eliminate the conflict, the friction between how the human brain and human behavior really work in a particular situation and the goals that we are pursuing in that particular situation. Now, why does that matter? That matters because for decades, many systems in our societies have been designed and maintained on the basis of assumptions, mostly powered through models of thinking, which were unrealistic about how human decision-making really happens. And that is valid for many of the systems that are still in place in society and we still haven't reformed. So in the past, most of the models from classical economic theory that are at the core of many systems in societies made the assumption that we as decision makers, as decision agents, tend to be 100% rational, that whenever we are faced with a decision, we proactively go and search for all relevant information, analyze it, and then arrive at the choice that seems to bring most benefits in the particular situation. Now, behavioral economists actually challenged many of these beliefs and proved in the last several decades that, in fact, in many situations, even even when they relate to important long-term decisions, we tend to avoid the rational paths of arriving at a choice. We lean on decision shortcuts. We ignore information, even if it's easily available. There's very interesting research that looks at how we sometimes deliberately ignore information, even though we know it's there. We are highly influenced by situational factors. And important for our topics of managing risk, especially in the context of climate change, we actually are poorly equipped at predict the future and foresee changes, even when they relate to our own personal tastes. And we dislike vague and complex decisions, which is exactly what we have to deal with when we are dealing with climate and risk management. So, because of the contributions that behavioral economics has made to understanding many contemporary societal challenges, even though it's a fairly young field of knowledge, it has actually grown in importance quite a bit. In the past 15 or 20 years, there's been at least 3 Nobel Prize awards in economics that have been awarded to leading names in behavioral economics, including to Daniel Kahneman in 2002, who is the first non-economist to receive the award. And again, as I mentioned, really the true contribution of the field has been not only in helping explain why we're seeing some of the phenomena that we are seeing in contemporary society, anything from unwise financial decision-making to poor adherence to healthy living principles and so on. but more importantly, in understanding the principles that produce these deviations from rationality in order for us to be able to design policies, social programs, products, offerings that are more realistic and that actually effectively work with the caveats that human decision-making seems to bring. I want to mention to you several of the key concepts and frameworks that have been advanced by behavioral sciences in the past decades, and I have selected the ones that are more relevant to our work. The first one is really probably the biggest contribution, and that's the understanding that decisions and behaviors at any given moment are really shaped by two groups of factors. One, of course, is the group of factors associated with individual specifics. This is where our personality, our previous experience, our value system come at play, and they, of course, power and influence to a large extent the choices that we make. However, a big role, sometimes the leading role, actually in many cases the leading role, is taken by factors that are associated with the immediate context in which we're found. And that context might mean the people who are with us, in whose company we are when we are making a decision or engaging in an action, or the physical space, or the cultural, social norms that are around us, the expectations of others about what is appropriate and what is inappropriate behavior. And ultimately, the difference or the power or the importance of the context, of the relevance of the context, is that it can make one and the same person with the same value system, the same experience, the same memories, end up with very different decisions based on who they're with, what's the physical space, how choices are designed, and how they're presented. A second, and I'll illustrate that in a moment with a couple of examples. The second pillar, really, framework that's at the core of behavioral economics is the understanding that our decisions are channeled through a dual decision-making system. Part of our decisions are channeled through our system one. This is our fast decision-making system. It behaves more like a child, like an impatient child. It constantly looks for quick, easy shortcuts that would lead it to a certain choice and would help it avoid the lengthy analytical process of comparing different options and analyzing them. Our fast thinking system is quite easily influenced by immediate context, by social circle, by previous experience, emotional state, and so on. Now, we still have our slow thinking rational system through which we channel decisions that take time, that require a little bit more thinking, that really require comparison of different options in order to arrive at the optimal one. What determines which system is going to kick in a specific situation is defined by numerous factors. But the one thing that's important to understand is that in contemporary societies, when our lifestyles are marked by the culture of multitasking, we see an increasing share of decisions, including important life decisions, long-term decisions, being channeled through system one and being influenced by the mechanisms that guide our fast thinking system. Another important thing to understand is that there are different factors that tend to complicate our decision-making and influence the actions that we end up taking. I have selected here several of these. that are relevant to the context in which we will be working. For example, the mentioned earlier poor ability to imagine and predict the future. As I mentioned, it's established that we are really poor at predicting the way that our own preferences and tastes will change in a matter of few years, let alone more serious changes in societal ecosystems or economic processes, unless we have professional background in them. Another one is present bias. This is our inclination to focus on decisions or to prioritize decisions and actions and benefits that are relevant to the current moment versus the ones that are relevant to the future. This is especially relevant and important to understand when we are dealing with decisions, the outcomes of which are expected to materialize in the future. So especially when we're dealing with sustainability and climate change issues, present bias is something that we really pay attention to. Again, very relevant to our topics and the complex and vague concepts that climate change, risk management, and sustainability are usually associated with. We tend to avoid such concepts and topics, and we tend to procrastinate. We're more likely to procrastinate or postpone actions that relate to such topics. Again, especially if we don't have the expertise and the more advanced knowledge that allows us to sort out through the complexities. And one more thing that is especially relevant in the context of insurance and decision on the risks. This is the bias towards losses versus gains. What this means is that we are 50% more likely to act in a situation if we fear that we might lose something than if we feel there's an opportunity to gain something. So what that means is that if we see certain situation as an opportunity to win or gain an advantage, a benefit, we might decide not to act. But if the same situation is described as a risk of losing something, there's a 50% more chance that we will actually engage in action in order to avoid or prevent the loss. Another important concept that we will certainly use in our work are biases. I have listed here, I have included here one of the more comprehensive maps of all the biases that behavioral sciences have mapped, with the clear understanding that you won't be able to see it, but obviously I'm happy to share that. These maps continuously evolve as we tend to formulate and describe new biases that guide our decisions in specific situations, from anything that from situations where we seek to favor simpler options over more complicated options, or to focus on actions which are simpler and more immediate rather than the ones extended on the future. They influence the likelihood of taking one or another action in particular situations. I want to now move away from the more theoretical description and give you a couple of examples. The first example puts you in a shopping context. So imagine that you are on the market for a night lamp because your night lamp or your desk lamp has stopped working. You go to the first store, you like this lamp, you accept the price, you go to the cashier's desk, and the person behind the desk tells you that if you're willing to walk for 10 minutes, there's another store that carries the exact same lamp and it's for 10 euros less. And if you're like the majority of consumers in this situation, you will drop the lamp, walk for 10 minutes, and then save the 10 euro. Now, the following weekend, you're on the market for a coffee table. You like the coffee table that's shown here on the screen. You accept the price. You go to the cashier's desk to pay for it, and the same situation repeats. The person behind it tells you that if you are willing to walk for 10 minutes, you can find the exact same table for 10 euro less. And if you're like the majority of consumers in this situation, you will pass on this opportunity and you will actually buy the more expensive coffee table and take it home. Now, the reason that this is a good example is that it actually illustrates how we can treat one and the same amount of money that's objectively the same, and that can objectively buy us the same number of cups of coffee or bus tickets or whatever. In two different situations, we treat it differently, and we tend to be to act and save it in one situation, but avoid the extra effort in another situation. This relates to the failures or maybe downsides of using our system one. System one, as we said, makes quick decisions, shortcut-driven decisions. The downside of it is that it often makes mistakes, such as this one, of treating one and the same amount differently. And the example here is related to money, but the same thing applies to time, to quantities, and so on. So anything that is volume-based. Another thing that this relates to is, again, the note on context and the fact that we make judgments based on the context. In this case, the starting amount that defines the specific situation. In the first case, $10 related to the starting amount is an amount that motivates action. In the second one, it doesn't. Another example, if you are at a conference and there's coffee served in the coffee break, you have 3 cup sizes to choose from. And again, if you're like most event goers, you will go with the middle one. Now imagine that on day 2, the same situation repeats, except that the vendor providing the cups has changed the sizes. And what used to be the middle yesterday, the most preferred cup size, today is the smallest cup size, and what used to be the largest yesterday, today is the middle option. And again, we're going to see the same pattern as from the previous day. Most event goers would consider the middle option as the safest option. It doesn't feel too small, it doesn't feel too large, but it also illustrates that what seems to be a more important factor is the context or the design of the choice set in which we're making a decision, and not so much whether we have already had enough or a lot of caffeine for the day, how much caffeine is good for us, and so on and so forth. So again, a very simple but powerful illustration suggesting and demonstrating the importance of context and the importance of how a decision situation is actually designed. This is one of my favorite ones. It relates to a bias that we often informally refer to as the ideal future self. And here's the scenario. Now many events try to pre-plan the food that they serve in order to avoid or prevent food waste. So imagine that you're going to a workshop or a conference and you're being asked whether after lunch for dessert, you're going to choose a healthy banana or a chocolate sweet. And in the spirit of our assumptions that in the future we will be making good and healthy decisions, usually 3/4 of the people in this situation would declare that they will go for a healthy banana. with the healthier option, and only 1/4 would admit that they will probably be tempted to take chocolate. Now, the reality is slightly different. On the day of the event, we are likely to see the exact opposite breakdown. And I'll come back to this example in a very specific situation. So you'll understand that this is not only about demonstrating in a cool way the biases that I mentioned. So let's look at how all of this works in real context and in more complex situations. The real importance of understanding all of these mechanisms that shape and influence how a decision will be made and what will be the outcome of this decision is really to improve our ability to make human realistic solutions and to present options in a way that's going to be most favorable for societies and for individuals. There's a two-step process behind behavior smart thinking. The first one is to understand the reasons, the factors that lead people to the current behaviors, and the root factors that explain them. The second is based on this understanding to come up and design and employ relevant behavior design solutions. It might be nudges, it might be other choice design techniques, it might be techniques that seek to alter the context in order to influence behavior in a desired direction or not. Now, why understanding the current behavior is so crucial? It makes a big difference because we can end up with very different solutions depending on the actual reasons that are behind the current behavior. So just imagine if we know that somebody is speaking is making an unhealthy food choice, there could be multiple reasons behind it, and then the solutions that would make sense in this particular situation would be different. So if we find out, if we understand with the first step that they simply don't know that this food is unhealthy, that it has specific undesirable impacts on their body, and that's why they're choosing that. So in this case, we would seek to give them information, increase their awareness, potentially at the moment that when they're making a decision, so that they can actually stay away and choose an alternative that is better for their health. But it could be that they are generally aware that this is an unhealthy food choice, but there's something else that's driving them towards that, either an emotional state or a craving or something else that is behind that. And in this situation, then simply providing information is not going to have any effect. We need to employ other behavior change tactics. So this is why, even in situations when we think we know what's the reason and what are the factors that shape current behavior, we need to still study and explore, which is something that we have discussed in the context of the design of our efforts. Now, I want to share with you a couple of examples on how this human realism can work and what does it mean from a context perspective. Remember, we mentioned that one of the things that we now know is that we understand the power of context. And I want to use an understandable example from a different industry that interests us, the car industry, as to how human realism can actually be employed and used or accompany the evolution of an industry. So many of you have seen or know that in the past, cars looked much like what you see on the left. They were mostly mechanical. Everything was under the full control of the driver. Today's vehicles look much more like what you see on the right. And in addition to the obvious improvements in comfort and visual design, there's something else that has dramatically changed. And that's the incorporation of safety features in the design of the physical space, the physical context in which driving behavior happens. So now we have non-negotiable permanent safety features such as safety belts, and the fact that if you fail to remember to put your safety belt on, the car will immediately issue a signal which will make it impossible for you to ignore. If you're driving a relatively new vehicle and you get distracted and there's a pedestrian or a bicycle or another vehicle in front of you that you fail to notice, the car will signal and most likely also activate the automatic stops in order to prevent undesirable situation. So you see that based on the understanding that driving is a behavior that is extended over time, that often overlaps with other actions and attention diverting situations, and that produces risky situations. The automobile industry has incorporated solutions which are there in place with the sole reason to minimize these mistakes or prevent the undesirable outcome that these might produce. So here we are not we're not judging whether somebody is supportive or non-supportive of safety, whether somebody is more experienced or less experienced. We are simply realistic that we tend to make mistakes like that, even the most careful drivers. So the wisest and the most practical and socially acceptable thing is to incorporate improvements in the context that steer the behavior in the most correct direction. So in essence, the design has evolved in a way that minimizes safety mistakes by making safe choices, the safest choices, the default option, by making safe actions the easiest thing to do, by eliminating high-risk options, and by activating your focus or attention when it's needed, when the car cannot do what the driver needs to do, and needs to make sure that the driver attention is focused. Now, it's important to understand that these behavioral corrections or corrections of decision mistakes are powerful, and they sort or solve part of the safety problem, but they do not solve it at 100%. In order to get at 100% safety, which some countries have almost achieved, they have employed or combined the improvements or the safety improvements in the driving context that automobiles have contributed with policies and traffic regulation and proper enforcement, and of course with improvements in road infrastructure, signage, and so on. And the reason that I'm mentioning this is that this is very relevant to the approach that makes sense from a human behavior perspective, with longer term complex challenges such as climate change and sustainability, because human knowledge about human behavior can influence and can be contribute with some corrections of the context, but it's most powerful when it's also combined with policy solutions, with service innovations, with proper infrastructure, technology, and so on, which is what we're looking to do here. Now, I want to give a couple of examples with how the employment of this knowledge, the understanding of human behavior, and then the use of behavioral sciences to influence it, has helped address some important societal challenges and continues to be employed for that. One of the signature studies that really focused attention on the power of behavioral economics is a study that was done in Europe in 2003, that looked at the effective enrollment rates in organ donation programs across Europe. And what became very evident from the study is that there's really an interesting distribution of the countries in Europe. Some of them were really close to the perfect 100% enrollment rate, and then many others were at the lower end. Now you see here the Netherlands, which is a little bit of an outlier, and the UK, and I want to specify that these numbers were achieved after lengthy and expensive public education campaigns that were supported by government authorities at the time. The point is that this distribution looked very unusual. And when the two researchers looked at the factors, they looked at cultural factors. And of course, you can see here that we have on both ends countries which are known to have cultural proximity. They studied value systems and acknowledged statements related to organ donation programs, public attitudes, and everything was almost perfectly consistent across the country. And what they discovered is that there's one factor that differs and seems to determine the change or the difference between these countries. And that was the design of the form in which you declare whether you enroll in the organ donation program of the specific country or not. So in the blue countries, the default option set in the form is that everybody is enrolled by default, and you have to take action to click a specific box if you don't want to be enrolled. In the yellow countries, the default was flipped. So in essence, nobody is enrolled, and you have to take action in order to mark the box that indicating that you want to enroll in the program. And this is this was so even though everybody consistently acknowledged that a well-functioning organ donation program is good for society, it's good for everybody's well-being, and it's good for individuals in situations when they actually need to benefit from such programs. But at the decision point, the design of the form matters, and what is set as the default matters, because regardless of the fact that on value system level we commit and agree, we actually do not want to think about situations like that, which are negative, which involve dark moments of one's life, or the likelihood that such can come. And so we seek to avoid these decisions unless the context presses us to make them. So because we avoid them, this means that whatever is set as the default option will become the choice of the majority, which is why in the blue countries we see almost perfect enrollment. The exceptions are also only people who proactively declare that they do not want to be included for cultural, religious, or whatever other reasons that are personally important. But everybody else is actually enrolled. So this study is powerful because it shows that a small change in the design of the form and a flipping of the default option can be very powerful and can actually power the effectiveness and success along with those social benefits that can be produced by a program such as organ donation program. This study gave reasons for reforms in this space in many countries. In the UK, behavioral economists actually keep very interesting statistics that counts the number of lives that have been saved since the change was introduced after the findings of this research. So it's really, really powerful and a good demonstration that some of the seemingly small changes in the way choices are presented can actually have profound effects on society. Another big picture example actually was inspired by the way that Mayor Giuliani in New York revamped the city back decades ago when he stepped into office. One of the signature efforts that he initiated when he came to office was the improvement of the overall environment in the city. And he did that based on the gut feeling that a cleaner and nicer environment without graffiti and trash on the streets actually will lead to a decline in crime and petty crime and undesirable social behavior. And this actually became a reality, and then subsequently inspired a series of academic studies that looked into this and produced the so-called broken window theory, which now informs urban development and public spending on public infrastructure, and which proved that this bicycle that you see on this image has 70% or more likelihood of being stolen compared to this bicycle here. So this is one of the studies that proved that the overall physical space and environment around us can actually increase the likelihood of desirable or undesirable behavior. Another one that comes closer to the space in which we are, and that's energy consumption. Back about 15 or so years ago, there was an experiment looking at how to encourage people to save energy and be smarter about energy consumption. Classical efforts such as education and even increased prices did not produce the desired effect. So one of the practices that was tested then and now is used actually by energy companies around the world is to employ neighborhood competition. So instead of simply encouraging people to be smart and to contribute to environmental efforts and energy saving, people receive along with their bills, or actually receive a new format of their bill, which looks a little bit like this, that places you in comparison to your immediate neighbors, challenging you to be better. And that actually encouraged more specific action and more likelihood that people will pay attention to how they consume energy than any other educational efforts. So great example that illustrates that understanding the exact triggers of what certain of how we can lead behavior change in a particular situation is very powerful. I know in previous meetings, Camelia has mentioned to you another one that came from the UK that relates to roof isolations. And again, the interesting finding that monetary factors themselves, or practical rational arguments, could not overcome the hassle factor. One more that's quite interesting comes from the aviation industry. Virgin Atlantic, again, more than 15 years ago, employed behavioral economics to change the behavior of its pilots and increase the likelihood that they will use fuel-saving techniques in order to optimize the carbon footprint of flights. Despite the fact that everybody was trained, that it was in their manuals, that they kept receiving reminders to do so, pilots were very unlikely to employ any of the very simple fuel efficiency techniques during flights, until a team of behavioral economists advised Virgin Atlantic to employ 3 different nudges. The first one was simply to begin informing pilots that their fuel efficiency behavior is being monitored by sending them at the end of each month in the form of a utility bill or a statement, a record of how fuel efficient they were during the flights during the respective month. The second was to give them an opportunity to set their own targets, a little bit of gamification there, which worked very well for the predominantly male audience. And the third one was actually to reward them with a donation to a preferred by them charity for the months when they actually managed to achieve their own goal. What was interesting was that only the first two nudges worked in this case. The mere fact that you're observed and that your employer now monitors this behavior increased the likelihood that the pilot will employ at least one of the techniques by 50%. And then the opportunity to set your own goals and then to try to achieve them added another 20%. So very simple changes that actually produced extremely powerful effect, which ended up not only optimizing the carbon footprint, but clearly also saving costs. The last example that I want to give you comes from the US. I know that the context here in Europe is slightly different, but many of you would know that in the US, especially until about 10 or so years ago, everybody individually made decisions about their retirement savings plan. And because of that, many people ended up under saving for retirement and then engaging in hardship in the final years of their life. Another recipient of a Nobel Prize, Richard Taylor, and his collaborators developed a program that was called Save More Tomorrow that sought to correct this mistake, because they understood that the problem or the reasons that this was occurring were again some of the things that we mentioned earlier: the fact that people are poor at predicting the future, the fact that people tend to underestimate future needs, to underestimate how things will develop. So they actually sought to utilize some of the biases that they know guide decision-making in order to correct this mistake. So what they did was develop the program called Save More Tomorrow, which sought to overcome this focus on the present by having them make the commitment today about how good they will be tomorrow. It sought a link that people commit to in advance to future salary raises. And it's used the power of defaults. And in fact, this was so powerful that it was incorporated in federal legislation as a result after that. Now, the reason I wanted to bring up that example is that I wanted to relate it to the fun example I mentioned earlier with the desserts and the banana, because in essence, the mechanism that I mentioned there, which we refer to as the ideal future self, is the same mechanism that's at the core of the improvement of retirement saving. And this is why I wanted to make the connection, because in the same mechanism that makes you believe that tomorrow you're going to eat healthier and make a healthier choice, but then fail to do so, is the same that leads people to believe that tomorrow they'll start saving more, but then they fail to do so. It's the same mechanism. So by understanding that, we can design programs that actually flip that and overcome these biases. So again, a reminder that understanding the factors behind the non-desired behavior are the important step that leads to influencing it. Now, when we think about insurance and risk management, there's several things that we need to understand from a human behavior perspective. And that's that overall, the decisions related to insurance are in direct conflict with multiple patterns or mechanisms that define human decision making. First, it involves thinking about the future, thinking about risk, and we have a tendency to avoid negative thoughts. The need to estimate risk, which involves abstract thinking, which we are not good at. The need to estimate probabilities. On top of that, it relates to something that's not quite exciting. It's not like going on a holiday, which again is in the future, but it's fun. And it also asks us to prioritize a future moment over a current event, which we know doesn't work. Now, this comes on top of climate, which again comes with a few characteristics that are unnatural for our decision making. Again, thinking about the future and risk and abstract, but also changing the status quo. So combining insurance and climate action is something that's particularly complicated, which is why it's important to understand the behavioral aspects. I do want to quickly share with you several examples that we have found with the research that we initiated into the insurance space. Martina from our team leads that effort and has been able to generate some very interesting studies and findings, which we will share at length. But here I'll refer to just 3 examples that illustrate how the insurance industry has started using behavioral insights. The first one comes from Soteria, which actually is one of the leaders in using behavioral sciences in the insurance space. In this case, we're looking at specifically the challenge of reducing behaviors that are harmful to one's health and that can lead to insurance events, particularly in the context of diabetes, because studies show that one of the main reasons that patients suffer from incidents that require health services and respectively insurance support is that they don't adhere to basic healthy habits in their daily life associated with physical movement and diet. So in order to actually address that, the insurance company combined efforts with the health and well-being services program, Grow Health, and designed a program, basically a digital application that was specifically designed to improve the healthy habits and sustain these healthy habits of insured people. The program is called Diabetes Management Program, and in essence involves the use of nudge and other design behavior design techniques in order to prevent the behaviors that lead to undesired outcomes. And here there's a multitude of behavioral insights and mechanisms that are used, from how do you get people to actually enroll in the program, to download the app and engage in the app, to how do you get them to stay inspired and stay committed to these types of behaviors over the long term, because this is the only way that you can achieve results. So you can see here that what's interesting is how the insurance provider finds it interesting to come up with a solution that invests in the prevention of the behavior that leads to the outcomes that then activate the need for insurance support. Another one comes from Farmers Insurance, and it's quite interesting. It actually seeks to address the following challenge: to encourage farmers to make sustainable choices when they're recovering and rebuilding after they have suffered from natural disasters or another insurance event. So the solution to that is a program called Eco Rebuild, which supports recovery, but it actually emphasizes rebuilding that's favorable to the environment. So the sustainable practices that involve dealing with the aftermath and restoring the assets is actually by design incorporates the sustainable practices. So for example, it places emphasis on recovery with green materials. It provides support for upgrading the energy status or the certification of the facilities. It provides support, reimbursement for recycling of debris rather than simply disposing of them, And then it provides 100% reimbursement for the recovery of green energy systems when these were in place. So you can see that the program is designed to actually support the transition to more sustainable building. Okay, wonderful. So the third example relates to car insurance, and it's interesting because it actually is designed in a way, it's definitely informed by behavioral economics, but it's designed in a way that contradicts what we know about human decision making and the mechanisms that shape driving behavior. The challenge that it seeks to resolve is to encourage drivers to behave safely and avoid high-risk driving situations in order to reduce the likelihood for an insurance event. The solution is called DriveWise, and it's a program that lowers insurance costs based on 6 month increments when you need to drive safely, and based on the recorded behavior by the app, you can lower the cost of your insurance rate. Now, the reason I mentioned that this actually contradicts what we know about driving behavior, and that I'm really interested in seeing the data as to whether it works, is that many of the decisions or the situations that we make behind the wheel that lead to high-risk situations are because of lost attention. So they're not mindful, proactive, engaging in unsafe driving, and also because of underestimating what is safe and what is unsafe driving behavior. In any case, the idea behind the app is to encourage mindful control over one's behavior in order to limit risky situation. It rewards safe behavior with lower cost. Again, what makes me have doubts here is that it hopes that it relies on a reward in the future, but you need to act now, which is where we often fail. It gives you some driver analytics, which provides extra benefit, and then it has some additional features which are attractive to drivers. So with this example, we covered the full content, and I just have a few points to synthesize the key takeaways that I hope I was able to convey today. The first one is that behavioral economics has really transformed the scale and the scope in which we utilize knowledge about human behavior, and how we employ that in order to address a variety of challenges in socioeconomic context. The second is that many systems in our society, including traditional approaches to sustainability and climate risk management, are designed around unrealistic behavioral assumptions. Third, human realism is not 100% solution, just like we illustrated with the driving example, but it is very powerful when it's combined with policy, market, and infrastructure tools in the context of solving complex challenges. Behavior smart approaches involve understanding the roots of undesired behavior and identifying the best tool for facilitating desired change. And as we demonstrated, behavioral techniques have worked across different social and economic contexts and hold great potential for powering smart innovations in the context of insurance and climate risk. So with this, I want to thank you.
We still have participants back, so.
Okay. So if there are any questions or comments, I know that we are a little bit beyond the original time.
I don't know, that sounds like nobody's talking. So as an insurance expert, I might as well jump in. Thank
So-
you, Milena. Excellent. Very nice. I'm coming from a family with psychologists, so so this is fun because also being a lobbyist, you have to be very, who do you approach? What do they know about you, or what should you know about them? How do they, what is their background, all of this. So anyway, so I think, just since you wanted feedback on your last insurance solution on cars, they did the same thing in Norway. An insurance company called Storebrand, like large fire, is tried to have people install this type of tool or something. And people were very, very skeptical, because it's like, if I do something wrong, would it mean I also get a higher premium? And they don't like really to be controlled in a car, maybe as particularly men, because they feel comfortable in the car if they brake, or if they, that it's more like a place where they don't want to be overlooked or controlled or monitored.
It's your own space.
Same, yeah, a little bit more than, okay, health is good for me, but my car is my secret place for, I don't, and then the uncertainty about, and the trust about insurance, that people doesn't really trust insurance. I've been part of several reports and surveys looking at why do people hate insurance, not hate insurance, but they don't like it because they feel they have to. So if they can avoid it and avoid giving them too much information, they're happy to, meaning not give them too much information, So I think that's one of the reasons.
Yeah, no, it's a great point. And as you illustrate, sometimes it's seemingly insignificant things such as, well, my car is my space, that can really end up being more important than factors even such as price and cost saving. But you mentioned something else here, which again adds to my doubt that this is an effective behavioral design, and that's that actually people fear more the potential loss or the risk that your premium can increase because you end up doing something wrong. And that's more powerful than the opportunity to gain sometime in the future. And that's another reason why I'm really doubtful. But I wanted to pull this example because of that, because it's obviously informed by psychology, but maybe not in the best possible way.
Sure. And I've been within, my God, was 28 years in insurance and 20 in trying to find new solutions to working in Finance Norway, which is the association. For example, we had a big report on in what areas are there less trust, for example, in insurance. And the more personal, usually, the more personal, like health, and that you are giving away health and personal information is very sensitive information. So and again, it was about how should you divide within the insurance the one with the higher risk and the lower risk, because people feel very quickly and unjust by saying I have a heart, or I have diabetes,
a certain condition.
So it's about how do you create a system where it's some sort of solidarity, but it's not typically it's based on competition. So that's a difficult issue, because competition, they love competitions, like the one you said, compete with your neighbor. And I saw that immediately, starting, 20 years on the board with 10 CEOs, and they were competing around the table just to correct you in some sort of figures, or so it's very, very competitive. So they don't really like what is happening. We had a meeting today with Greece with a demo, and they talk because it might be a new system in Greece where they have mandatory insurance.
Yeah.
And again, mandatory insurance is good because it offers everybody to have it, you know, on one side. But
Yeah.
then again, it's about, you know, so you trust the law, but that the law will take care of this competitive factor.
Yeah.
Whereas on the other side, then you don't really, as in Norway and France and Spain, you don't really have consideration of the risk because everybody pays the same. It's a flat rate premium. So it doesn't really matter if you do a lot of climate adaptation measures because it's not going to affect your price. It's still the same.
Yeah.
So that's where we are in, you know, typically within some of the, well, challenges within insurance, because if it's a very low penetration, it's only like in Greece, there's like 16% that buys it. It's probably the people who needs it that buys it. So it's very expensive, you know. And the thing with Norway where so it's not mandatory to buy property insurance, but if you do it, you automatically get natural catastrophe connected to your fire insurance. So it's then the solidarity part kicks in, because then if you have a property insurance, then everybody would then get cover, even though you're never going to use the cover, because you live in Oslo in the middle of where this nothing's going to happen. And so it's a solidarity system that kicks in together with the fire insurance. And then then they add usually like a combination of other insurance product, like water, if you have water in the city. In Norway, it's not a natural catastrophe, for example. So, but I think, I don't know if there can't see who else are on the. I see that Maria is writing.
More questions, yes, and Michaela raised the hand.
Yeah, so
Michaela is also a psychologist. Yeah, Michaela from Gabriel.
Yes, hi everyone. I'm Milena, great work. So I was just going to pitch in with, I'm listening to Mia, what she has to say, and obviously given the lecture as well. So basically how I see it, we basically have to adjust wants and needs to probably appropriate incentives in terms of insurance. So it's not like an imposed choice, but basically to get people to think or motivated to make an informed choice based on facts and figures, and what we're coming to as well, incentives. Right now, because we were talking about cars, and I remembered a few years back when I lived in South Africa, they had this, it was a car insurance that would give you incentive should you drive according to the law. So if you abide the rules, there was some kind of a tracking device installed in the, I mean, probably it's not new to you guys, but I'm not a driver, so I was quite impressed by this. So if the driver abides the law and you can track them and you can see how they drive during the month, then at the end of the month, you get money for full tank of petrol or gas or whatever you use. So that's quite a good incentive. So on one side, you get your money for the petrol, you abide the law, and most likely there is less traffic accidents and so forth, and basically you drive properly the car and so forth and so forth. But in terms of natural disasters, maybe we don't have natural disasters as of yet, say in Gabriel, but the way the climate change takes place, we should probably see, I don't know, science, facts, and analyze what could happen. I mean, there is a, I suppose, predicting element into all of it going on. I mean, I don't know if it made sense. But
yes, it makes sense. The South African example is very similar to the design of that solution by Allstate in the US. So it is interesting that
it might be the same insurance company.
I don't
say
yeah,
which
I don't
ones.
know. In the US, it's Allstate, which is one of the largest ones, but it doesn't matter. It's they're all indications of the fact that there are efforts to employ behavioral knowledge about behavioral principles. And the question is, how do we actually learn from what has already been done, but also how do we account for the fact that adapting to new climate risk realities is very different from driving or from it is to me actually the example with healthy habits is probably the one that is closer to the patterns that we'll be looking at, because we're not going to be looking at only one. But I see a question from Maria on the approaches that are applicable to the different types of insurance, and specifically whether defaulting and choice framing are effective. Maria, great questions, and they probably are effective in certain situations and probably less effective in other situations. That's why I gave the retirement example from the US, even though here in Europe we have different systems and it's less applicable, but it is a good example of how a combination of how you present choices, the timing of these choices, and the use of defaults in combination can actually address something as complicated as retirement planning, which is again extended over time. It's full of biases and quite complex. So I assume that with the work that we will be doing, first when we reveal the factors that currently explain, for example, coverage gaps, and then we decide to test and experiment with what we work best, we will be able to find the best combinations, which are very likely to actually vary across the different countries in the different contexts for a variety of reasons. But the reality is, as Mia said, insurance is one of those things that's never loved. So in some cases, it might not be by love, but it might be that there's a required minimum or a required default that's always in place just to get people to just to maximize and ensure that an increasing rate of people are covered. So, Mia?
I think the last 10 years at least in Norway, and I think that is overall, is like the EU is trying to help people being able to buy insurance cross borders, you know, so but why is it not working? It's because they don't know the background and the law behind the law, you know, behind the product.
That's the thing.
Yeah. So as natural catastrophes are very much different from country to country, it's very difficult to find one solution because they're all based on a system behind it, which is usually either legal, like in Norway, Spain, and France, where it's regulated how natural catastrophes, what is it, what is defined as a natural catastrophe, and what is included in what I mentioned automatically in the fire insurance. So people feel like, because there's like 99% people who buys the property insurance, since they automatically get natural catastrophe cover, they feel it's almost free, because it's almost free. I mean, compared to what you have to pay, for example, in Germany, where people are with the insurance company are not having this type of inclusive system, this, you know, bundled system. So you have to choose yourself if you want to buy a flooding insurance. So, and in Germany, they don't have like a flat price like we have. They they collect all the insurance loss data under a certain system, under the association, and they use that to divide the country into 4 different risk zones, right? So if you are in a bad area for flooding, the price will be very high. And so they get, and at the same time, the government usually steps in, you know, to say, we will rescue you, and, you know, we can offer you payback if something happens. So they don't think they maybe need that. It's a little bit like, you know, in Bulgaria, we hope that the state will help us. So, and in that context, people are thinking, especially in the older Eastern Germany, because they're not used to insurance. They're not used to own something. So you really have to go beyond why people make their choices, like you're trying to do now. So, so again, like in back to Greece, where they say, well, we have tried this system, that it's voluntarily, it's not working, it's only 16% that buys it. So now they said, okay, let's try another system. Let's make it mandatory. And then the question is, how do we do this? You know, when it's all new, the insurance company needs to understand what is the risk, meaning what is the probability of an incident to happen, and number 2, what will it cost my company? So based on that, you put a price, right? So when you don't know those factors, how are you going to put the right price? It's, you know, so that's something that typically will be a question when you are trying to have the insurance industry willingness to offer the insurance, like in Bulgaria, for example. You know?
Yeah.
But the good thing is, like, what I could now, when you had this seminar, I was thinking maybe I should have something similar to explain what happened in Norway when we managed to have a very close discussion with the different 8 national agencies and directorates and sort of who's part of the decision making and lawmaking, and also the municipality, and understand that they did not have any information on where the risk was. They didn't have any information on how the mapping, because that comes from the national authorities. So how do we combine the understanding and all the information from the insurance to help the municipalities understand their exposure and the location of where the vulnerable areas are? And this is what we did, and this is what it's called the knowledge bank, which is written about in Soteria. And you are part of task 2-3, where this is exactly the issue. You know, how can you use that understanding and approach on a private or public discussion and dialogue to end up with insurance being willing to give away sort of, or share the very valid information on all the losses they've had.
Yeah. No, there are really many dimensions that that are interesting from a behavioral perspective. So we definitely look forward to contributing. I need to drop out because I have another meeting, but I wanted to thank everybody, and obviously we're within one team, so any additional questions or thoughts that come up, please feel free to reach out, and I certainly hope that all of this was helpful, and we look forward to continuing to add value to very interesting work.
Could you send your presentation? Is that okay?
I will do that. Yeah, of course.
To everybody.
Yes,
yeah, okay.
I will do that.
Maybe Laura put it somewhere that, yeah, okay, Laura's nodding. Okay.
Okay, thank you so much.
Thank you.
Thank you very much, Milena.
Bye,
Thank
everybody.
you. Bye.